Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He was the #1 U.S. stock market timer in the January 2020 edition of Timer Digest. He's speaking to us from Arizona. Welcome back to HowStreet.com radio.
It's a lot of fun. Thank you for having me, Jim.
Mark, can we go for a lower low in the Dow?
Anything is possible in the stock market, as we saw in the past 4 or 5 weeks, Jim. I don't want to say we couldn't do it. It sure looked like a bottom to me, accompanied by so much negative news, and we continue to get negative news every day, it appears, unemployment numbers, spread of the coronavirus, and so forth. At least for the near term, I don't think that's the case. I think, maybe we're going to forge out what technicians refer to as a W bottom, where, you sold off, we come up, we come down, maybe retest lows or part of the advance at some point, and then continue the advance. Maybe that'll unfold. I have to watch the indicators and volume. On a trading basis, we lightened up quite a bit here. We've had a big move, so it wouldn't surprise me if we get a little bit of a pullback. But, for longer-term investors or near-term investors versus, 1 or 2 or 3 day investors, the trend appears higher. I created this forecast model, which is one of the reasons I got ranked so high in terms of overall market timing. I've been doing it since 1987, and the model called for a sell-off in the latter part of last year into this year possibly, and it warned me that something could be coming. The same model called for a low sometime in mid-March this year, and sure enough, the coronavirus came up, and we took off to the upside after that low. That same model, and again, it's only one indicator, and you have to look at a bunch of stuff, which we do, but it basically said you hit a mid-March low, and you could rally into summer. So this is the low we saw, except for normal zigzags, could possibly be it for a while. I'm not predicting after summer or what could happen into the fall with the U.S. elections or what could happen next year. I mean, anything could change, but, what basically we saw would encourage me to answer your question. I'd be surprised if we made a new low. So let's leave it at that.
President Trump was talking about a V bottom for the stock market. What are your thoughts on that?
Well, again, this goes back. Normally there is no normal. I guess that's it. We saw we thought we saw a V bottom back in 2008-9. It came down, rallied, it came back down again, made a lower low, and then it took off. That was, I guess, more the W type pattern that I just referred to. Last I heard, I don't think Donald Trump is a market forecaster, but maybe it's self-fulfilling. So far, it appears to be a V the way it's unfolding here. So it could happen. It could happen. My models are positive. So, I can't say yes. I can't say no. All I can say is our model turned positive, and except for a normal retracement, which we're probably due for here, I would think in the next few days, having rallied as much as we have, I would say anything is possible and stay positive regardless of whether it's a V or a W.
Has the volume on the New York Stock Exchange reached capitulation levels?
I think they did when we sold off. I know many of the indicators, the VIX went to historic levels, and bearish sentiment numbers went to historic levels. I don't have the actual volume numbers in front of me, but I sort of remember seeing, near a record volume at the lows, which is sort of typical in a panic, which is irrelevant to my analysis. I don't really care if they're record or not record. The question is, do the technicals and sentiment and cycles all show a top or a bottom? In this case, they point to the likelihood of a low. So If it did, all the better, I guess, for those who'd like to see capitulation. It sure looked like capitulation to me on a price basis, regardless of whether volume confirmed or not, Jim. So that's where we're at.
Does the speed of this stock market crash bode well for a V bottom?
Good question. We don't have a lot of empirical data. It's not like we get crashes and V bottoms, 100 times during the century where we can say statistically that's good or bad. The answer is I don't know.
Is this the time to be bullish on the stock markets and bearish on the economy?
I don't think I would be bearish on the economy beyond, the next quarter or so. I think, all the financial news is telling us that we're going into if not a recession, a depression. But, government support, at least here in the U.S., is going to be backing a lot of businesses. Bailouts are coming. A lot of people are getting very eager to get back to work. My gut feeling is things, maybe along the V bottom analogy you just made, I think things could explode to the upside once people get back to work and this virus is under control, which frankly appears to be not too far off. So a lot of my research is saying, beyond mid-April and certainly by mid-May, the worst could be behind us and we're off and running. And again, markets tend to anticipate the future. So no matter how bad the news is, it's got to be extraordinarily bad. Usually the markets discount much of that in advance, so that's why I think the lows are in, and even if the news is bad, we probably would not make a new low, but the economy is eager to rekindle itself. I know people are anxious to get back to work, and I think things, won't be as bad, but yes, obviously those who measure quarter-to-quarter performance are going to see some negatives during this first quarter, no question about it, and possibly into the second quarter, but that doesn't change, the fact that the market and the economy can't recover dramatically. It was an extraordinary event. It was something which is unbelievable, and we chatted about this in our initial interview, what this is all about. Was it a planned event? Was it purely accidental? So the forces at work here that possibly obviously not very positive ones, and I'd like to think that we live in a Pollyannish world and it was just a pure accident and everything just happened because it happened the way I suppose a meteor or an asteroid would hit the Earth. It's not like somebody caused it, but I'm a little more skeptical than that. But taking that aside, I think the worst is going to be behind us here short term on the economy, and the stock market is already predicting that.
Is the crash of 2020 comparable to the crashes of 87 or the crash of 2008?
I would say yes, more or less. The patterns tend to be the same when they come down. The coming out of it is not always the same. In 1987, and I lived through that. It came down, and it took the market really a couple years really to really regroup itself. I think it made a lower low or double bottomed in December after the October crash in 87, and it sort of worked its way up, and then it had struggled for a long period of time, and not as dramatically up the way the current market went up, or as the 2009 bottom came out of its thing. So, they're more similar in the way they come down with panic. The way they come out of it, could be different. So I don't want to say they all, and again, this goes back to my comment a few minutes ago, we don't have enough crashes to really draw a conclusion about how they should respond, but we've got so much government intervention now. We've got the U.S. Plunge Protection Team, which I don't think we talked about, that executive order that Ronald Reagan signed. I think it's called Executive Order 12684 back in November 1988, which gives the Treasury and a bunch of other institutions the right to go in there and buy stocks, buy the indexes, or do whatever they need to do to support the market. So part of that is probably what's happening in this cycle more so than we've seen in previous cycles when the Plunge Protection Team perhaps wasn't as active in 87 because it hadn't been activated yet. It was activated in 2008-9. I suppose the recovery could be somewhat attributable to that, and certainly in the current time frame. And keep in mind, Japan has their own version of the Plunge Protection Team. Their government is actively involved in buying stocks and ETFs and investing and putting money into the market. Our government doesn't admit they could do that, but they have the power, and they may have been doing so.
President Trump wants to get the U.S. back to work by Easter. What effect would that have on the markets?
very positive. Don't know if it's going to happen or not. There are a lot of contradictory forces out there, I guess is the best way to describe it, that are pushing to keep people in their houses for a longer period of time. I think he's right on a certain level. I'd like to see new cases start to diminish a little bit. There are some early signs of that now. I heard the governor of the state of New York saying that their average patient admittance numbers or their capacity number ceiling or whatever the phrase was, has been expanding. Like once it seemed like every day and a half to every possibly 3 or 4 days now. So there might already be a mitigation of the amount of admittance to the hospitals. So there may already be some early signs of it. Let's hope that's the case. So April 6th, I know he wants to do something before Passover and Easter. I think he's smart in trying to get the economy going again for obvious reasons. He wants to be reelected, and the longer this continues, the worse it is. I think people can manage it. I think if people wash their hands, if they need to wear face masks, assuming they can get the proper ones, keep some social distancing for a period of time, I think we can work our way through it. I mean, I know down here in Arizona, I see FedEx drivers, UPS drivers, I see the streets active. I guess maybe Arizona is not as affected or as concerned, even though there are warnings about it. They have closed some schools, but I see a lot of people working and doing stuff out here and just trying to take precautions. So I think with precautions, I think he may be successful. So let's see what happens by April 6th. I'm hopeful.
We'll have more with Mark Leibovit right after the break.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Mark Leibovit. Mark, after a great run, is the U.S. dollar looking bearish again?
Yes, in fact, we're actually short the dollar here. It had a double top formation. I'm not saying it's a big top forever or anything like that, but it had a technical sell signal. So we're playing the inverse ETF for the dollar. And we're in position for the last couple of days, looking for a little bit more of a pullback there. And by the way, that's bullish, for other markets. Supposedly, it should be good for gold and silver and commodities and oil as the dollar weakens. But if you noticed, as the dollar rallied, stocks also went down. So if we get a weaker dollar, that might be a little more impetus for the continuation of the stock market rally. So whether it's a very short-term event for a few days or weeks or maybe a few months, or it's something more long-lasting, I can't say right now. We're playing the technicals, but the dollar did peak out short-term, and we'll take it day to day. If that dollar does reverse back to the upside, that would be bad, I think, for the U.S. market short-term and possibly for some commodities. But right now it's weak, so I'd be constructive on the commodity market and the stock market.
Gold and silver have become very volatile. Is this a sign of gold and silver bull markets getting ready to launch?
I'm sort of on the fence on that one. I'm more of a trader. The last few weeks when gold got all the way up towards $1,700 and silver, I think, was up toward $18, $19. I was warning everyone to be careful. That seasonality comes in February, sometimes into March. You get a peak in the market. And we needed to pull back. I thought the fair value for gold was more like $1,440, not $1,700. And sure enough, we pulled back there, and now we seem to be regrouping again to the $1,600 area. Seasonality is still sort of negative here, very short term for a month or two. We tend to make bottoms in the summer. So I'd be more of a buyer this summer in gold and silver for another trade. The big number for me is way up there, like $1,790 U.S. in gold. Now, I know Canadians have already enjoyed new record highs in the gold market with the weak Canadian dollar, but in the terms of U.S. dollars, if we could take out that 1,790, 1,800 area, that might tell me that we're really going to go and hit some of the big numbers. But I have no confidence that's happening right away. But I would say I'd be a buyer if we have some pullback here into the summer and see where the next leg takes us and take it from there. I mean, big picture. Listen, I've been bullish on gold for 25, 30 years, and even so, you got to trade it. I mean, we've seen some huge swings. So I know a lot of people believe that we may go back to a gold standard, or they're hoping that we go back to a gold standard. And I'm reading all these stories every day how you can't get physical delivery of gold in Europe, and the banks are buying it, or you can't, one story or another, and the shortages. And you have to pay a big premium to get physical delivery. So there is something going on. And I know one of the I don't know if she's been approved yet, but one of the proposed members of the new members for the U.S. Federal Reserve, it's a lady. I forget her name. I know she's very pro-gold and gold standard, at least in some of her writings. So maybe, we are going to see something more dramatic to the upside in the months and years ahead. And I know gold is way behind the other markets, and it should be much higher than it is. And a lot of that has to do with manipulation in the gold market. There's a great website, and I'm not saying this because I make any money on it, and they are friends of mine, but it's called GATA.org, and you probably have interviewed them. Bill Murphy over there, GATE.org, and they've been doing 20-year studies on the sinister things that are going on in the gold market with, government intervention and manipulation, and I believe their research is correct. In fact, they have a lot of anecdotal evidence or letters or statements from very prominent people. So if that hadn't occurred, gold would probably be $3,000-$4,000 an ounce now already if there wasn't all this shenanigans, and also the paper trading on the COMEX. We've been talking and writing about that for years, about all the fake trading going on there, paper trading, depressing the markets, and just a lot of shenanigans going on in that market. So maybe all this will get cleaned up, and we'll have a more honest market. And gold doesn't have to go to $10,000 an ounce. I mean, it could be fair valued, at $3,000 or $4,000 based on inflation and based on supply and demand. And doesn't necessarily have to scare the governments the way apparently it does. People believe that a strong gold market makes the government look weak, but I don't know if that's the case. The sentiment starts turning more and more to the gold standard thinking. So time will tell, and I'm sorry to be so long-winded, but let's a little cautious here on gold, very short term, bullish as we approach the summer, and we'll try to catch another run into the fall and winter of 2020.
We're hearing gold and silver are likely to top in early 2021, and also that they might top in 2022. What are your thoughts on those predictions?
That's too far out for me, Jim. I can't. I do my forecast models year to year, and I have no forecast out that far. I know others have made predictions out into that time frame, and I have no sense of it. My work is more near-term oriented, and even maybe a year in advance if I rely totally only on my forecast model, which I don't like to do totally. I like to rely on other indicators as well. So to answer your question, I have no idea what 21, 22 is going to do as we approach the time frame. We'll look at our stuff and report it accordingly.
We'll have more with Mark Leibovit right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, are we likely to see bank rates continue to decrease and mortgage rates increase?
I know the Fed's got their brakes on, so I know they've done their best to keep interest rates low. Though I've heard the mortgage market didn't respond as dramatically to the downside, and some of the recent stuff I've been seeing is mortgage rates have been upticking a little bit because of an ability to service the loans and still demand for real estate. So if we're going to get a recovery here, and I think we will, and particularly with government influence and people getting back to the work and the virus disappearing, I would think rates would start, inching up again. So I'd be more positive. I don't think the bond market, it's already got temporarily. Some of the treasuries I saw traded into negative territory intraday. I don't know if it was yesterday or the day before here in the U.S. So it's just incredible. We already learned from the European model that negative interest rates don't work. So I think the powers that be hopefully realize that, unless they're going to somehow try to get rid of currencies and get us on some type of digital currency format, which there's a lot of rumors about, but I don't think is happening so fast. So I think the recovery would be in conjunction with rates starting to tick up here a little bit and things hopefully getting back to normal. I would hate to see rates stay this low or into negative territory, because that's a bad omen for the economy and for the stock market, at least if we compare to what the European experience has been.
Which sectors are you watching this week?
Well, one of the hot ones was cannabis, which has been in a bear market since April of last year. And we have positions in a bunch of cannabis stocks, a lot of them coming off lows. In fact, today, Thursday, the most active traded cannabis stock was Aurora Cannabis, the Canadian company. Traded, 150 million shares or some huge number. It was the top of my sorts when I was going over it before we went on the air. I think it's back to $1 a share. Now, whether that's a turnaround for Aurora or what, but if you start to see some upside volume like that come in, it's a good sign, and many of these stocks have been beaten down, so I'm not predicting that they're all going to run back to their highs so fast, but across the board, even before the market turned up in the last few days, the cannabis stocks were holding their lows and showing some interest. So they're in play here, and that's one that has caught my attention in particular. One sector that we have focused in on. I was also watching the solar stocks. There was a lot. They got beaten down with the crash, and there was talk, in Congress. I don't know if it got passed or not as part of the bailout bill that they were trying to get some tax breaks in for solar companies, and I'm not sure if that was incorporated in the settlement between the Democrats and Republicans or not. I know they were disputing that point, but I know the solar stocks have been upticking here in the last couple of days after depressed levels. And I'm a big fan of solar stocks anyway, whether you believe they replace other energy, which I don't think they do, but I think there's definitely a place for them. So there's some trades in solar, but primarily the cannabis thing is the one that stuck out the most this past week for me.
How can people find out more about the Leibovit VR newsletters?
Very simple, Jim. Just go to vrtrader.com. VR stands for Volume Reversal, which is my big technical tool, which, by the way, traders can access if they want to go to 3 platforms, Metastock, eSignal, or TradeStation. You can actually pay a monthly fee if you go to those platforms and actually buy the volume reversal and put it up on your screen as an add-on indicator, just to get off on a tangent a little bit for those traders out there who like technical tools. I've used it for many decades, and it's my primary trading tool, the volume reversal. But VR stands for volume reversal, so go to vrtrader.com. And I would say to your listeners, if they email me and they want to sign up, they email me first. I can send them a promo code, which will give them a 50% discount on any subscription. So go to vrtrader.com, find something you like, email me. You'll see my email address up on the site, and I'll send you the promo code.
Mark, thank you so much for chatting with us.
Thank you, Jim. Thanks for having me.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, online at vrtrader.com. If you have any questions for Mark or any of our other guests, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.